Good day, everyone. My name is Caesar Mondragon. Today, I will be presenting on the East Coast Yachts, Chapter 1 Closing Case. This case asks a question, which is what are the advantages and disadvantages between a sole proprietorship, an LLC, and a corporation, based ultimately to feed into the decision of the owner has to make on what structure should the company adopt. We'll start with the background into the company. The company was founded in 1969 by Mr. Tom Warren in Hilton Head Island, South Carolina, where they are currently established or operating out of. They manufacture high-performance, mid-size, and custom-designed yachts. Their clientele consists of mostly wealthy clients and, on occasion, some businesses. They are recognized in the industry for their safety and reliability. Current structure is a sole proprietorship, which is day-to-day operations ran by Mr. Warren's daughter, Larissa. Before we get into the different advantages and disadvantages of the different operating structures, first is the yacht industry market. So I want to go over a little bit over that. One, the market is fragmented, meaning that there are multiple manufacturers, not just in North America, but all over the globe. It is a limited market leaders, so there is no dominant market leader in the as far as manufacturers. The market is a highly competitive market with a niche market being technically heavy industry and high production and operating costs. That being said, as you can see in the slide, the global luxury market for 2021, between 2021 and 2025, is projected to accelerate and grow. So right now at 11.32%. 36% of that growth is going to come from Europe. The North American market is projected between 20 and 25%. Growth for 2021 was 7.84%. And the individual incremental growth for units, so between 2020 and 2025, was at 327 units. So the potential for East Coast Yachts to grow its market is there. So going into the advantages and this disadvantage of the LLC. First, go over advantages. LLC advantages limits liability to managers and members, meaning that unlike a sole proprietorship, which is liabilities are include as personal assets, in an LLC, those company assets are the ones that are liable, let's say, against a lawsuit or any legal actions. Like a sole proprietorship, flexible management structures, not as much, but not as hard as say a corporation. One of the biggest ones, and this is with the similarity with the corporation, it offers flow-through taxation, which basically means that profits and distribution to the members, distribute between the members, taxed on profits at the personal tax level, not the company corporate level, and then it avoids double taxation, like I say, proprietorship, as opposed to a corporation. It offers good privacy protections. It's an excellent vehicle for holding appreciating assets. Appreciating assets being real estate, stock portfolios, intellectual property, and so on. And it's an extraordinary flexibility in the ability to allocate those profits and losses to members in varying amounts, as opposed to being owned by that individual owner. So let's say losses in a sole proprietorship are strictly owned by that owner. So disadvantages, it does incur extra fees for operating an LLC in most states. All income may be subject to payroll or self-employed taxes. Transferability restrictions. So, consent of membership is required for each and every transfer of membership interest. So let's say you have a member that wants to leave the LLC. Consent is required by all members, as opposed to, let's say, that one owner and a sole proprietorship. And then single member LLCs face reduced asset protections. So a state may not honor asset protections or personal asset protections for LLCs with a single owner LLC, basically treating it like a sole proprietorship. All right, going into corporations. Advantages: limited liabilities against personal assets and legal challenges. Personal assets like your homes, your cars, your jewelry, expensive luxuries are not in play when it comes to challenges or there are suits that are brought up upon the corporation. Can issue shares of stocks to raise capital, basically bring in investors, and this is one of the biggest ones, I believe, if the East Coast Yachts decides to go outside or expand outside of its current market, because it would require significant financing for expansion and research and development. And one of the ways that a corporation can do that would be to sell stocks or shares of their stock. Business can be perpetual, so not tied down to that one single owner, and then reinvest in dividend payouts. Disadvantages: complicated tax schedule, so double taxation on personal and corporate incomes. Diminished control over overall company operations. So you have to answer to shareholders. There are boards, which leads to lengthy decision-making process, and definitely limited flexibility when it comes to making decisions or going left and right limits because of those established boards and shareholders, which then brings into the disadvantages as far as being governed with established bylaws. So this can be both a advantage and disadvantage, but in terms of the disadvantage, you would have to operate within those established bylaws, standard operating procedures, and do anything different outside of that would require lengthy sometimes bureaucratic negotiating and committees and decision making. So unlike a sole proprietorship, which has that single owner that can make a decision on the spot without having to answer anybody, corporations do not. Ultimately, I came up with two recommendations or courses of actions. So COA 1 would be to maintain that proprietorship structure. And this is because it would allow the owner to maintain full control over company operations and trajectory is vested in that one owner. So which means that quicker decision making, control over product development, QA/QC, bring new products into market would not require those lengthy permissions by the boards or shareholders. Easier to establish personal relationships with customers. There are fewer tax regulations, so no corporate income tax, potential taxes. There are potential tax advantages, and then easier tax structure. COA number 2 would be to restructure company into an LLC, leading into a corporation later on once the company grows a little bit bigger. So enhanced legal protections and liabilities. So limited personal liabilities, protection to personal assets, separate legal entities. So the LLC being its own legal entity, and then would bring credibility to the company as a whole. Most of the time we think Mom and pop, when we think of sole proprietorships, LLC would be going into the bigger company. And then a simplified tax structure, so no corporate income tax, flow through taxation, again, avoid those double taxations. Ultimately, these are the two recommendations I came up with. If the owner was thinking about going into a broader market, then we would have to relook at that. This is it for me. Thank you. Have a good night.